Hello everyone, Namaste all of you. My name is Pavan Kumar. I am a chartered accountant in practice and also a qualified cost accountant. I have done my masters in finance. I have done post-graduation diplomas in finance and commerce. And I am a teacher. I teach this commerce, finance and accounts to various students pursuing professional courses in management and commerce stream like chartered accountancy, cost accountancy. I have 1.5 decades of experience in this teaching, and I have almost 2 decades of experience in investing money in stock markets. So I have become a qualified cost accountant in the year 2004 and a qualified chartered accountant in the year 2006. And today we are sitting on 20th December 2020. That means it's been 15 years of my fantastic journey as a chartered accountant, and I am keenly observing various industries. I am investor as well. I invest money in stock markets like equity mutual funds, and I invest in shares and other derivative instruments and all also. So I have good understanding both about the theory of stock markets and in reality what are the practical facets. What I have understood as a chartered accountant in the last 10 years is the financial literacy in India is comparatively lower than the other countries. So advanced countries, if you see, their fixed deposits rates are lesser, their interest rates are lesser, and for them getting money to do business is easier than how much we struggle in India to pool capital. So in India, can you believe even today after hundreds of years of introduction of stock markets, after dozens of years of formalizing stock markets with this Securities and Exchange Board of India and enactments like SCRA, Securities Contract Regulation Acts. So many parameters were taken, but do you know even today a layman in India thinks stock market is gambling? I'm serious. Even today, laymen in India, when you speak something about stock market, they say, no, it is gambling. They don't even use the word speculation. They say it is gambling. That is the reason less than 3% or 4% of people in India are investing money in stock markets. Even today, 80% of monies saved by Indians are still in post offices and nationalized banks or fixed deposits, and maybe sometimes this traditional other investments like chit funds, etc. they are there. So people invest money in real estate, people invest money in gold, people invest money in properties, people invest money in houses, buildings, but when it comes to stock markets, whoever you are, whether you are a businessman, whether you are an industrialist, whether you are an employee, or whether you are running something on your own, self-employed. So there are 2 extreme things. One extreme side is you are very excited about stock market and you want to make millions and billions. This is one angle, and the other angle is stock market is gambling. So what exactly the reality is? What is stock market? To earn money in stock market, I have understood with my 1.5 decades of experience, to earn money in stock market, first you need to learn, you need to have solid understanding, you need to have basic knowledge, you need to have common sense, you need to have emotional balance, you need to have neutral risk appetite, you need to have a proper calculation of risks and returns. So if you do not have these kind of characteristics or skills, what we say, and if you are putting your money in stock market, my dear friend, I am telling you, your hands will be burnt and you will not have money to purchase Bernal also. But at the same time, do you know how profitable stock markets are and how can you create wealth in stock market? You will be astonished today with the examples, a real life, real time examples what I am going to show you. You will be bloody surprised and get ready for mental assault. So I call this series of blogs and videos what I'm going to make about the stock markets, I have named them as financial literacy. What is this? Financial literacy. Before we go into the details, I'll tell you 1-2 points. Point number 1, I'm not investment advisor. If you say, Pavan sir, I have 1 lakh rupees with me, what should I do? Should I invest in equity or should I invest in fixed deposit, or what exactly I'm supposed to do? Sorry boss, I am not investment advisor. I am a teacher. I am a chartered accountant. So I will try to share my knowledge with you, but I am not any kind of advisor. If you need advisors, you have so many good broking firms, you have so many stock market members, brokers. So who are better people to advise you? So point number one, I am not investment advisor. Point number two, I am not stockbroker and I do not have any connection with stock markets. And other than that, except that I do invest money in some equity shares and in some debt instruments. Other than that, I do not have any connection. And point number three, with this series of blogs and with this series of videos, I do not have any commercial intent. I am not into any kind of consultancy. Even if you consult me also, I will have to say, sorry boss, approach a proper certified financial planner or proper portfolio manager. I'm not into any of these things. But with this 15 years of experience as a teacher and as a practicing chartered accountant, I have seen the best in the stock market. I have seen the worst in the stock market, both theoretically as a case study and also practically with my own money. There were situations where my mutual funds have given 65 to 70% of returns in a year. And there were situations where my capital, the principal amount, whatever I have invested in stock market also eroded left and right and have given bleeding losses. I have seen both sides. Both theoretically I have seen and also practically I have seen. So that is the reason this is only for knowledge purpose. So I named this series as Financial Literacy and this is part 1. So as I told you, I am a chartered accountant and I am specialized in international financial reporting standards and I am All India scholar in both chartered accountancy, cost accountancy. I have got 4 All India ranks, I have got a gold medal and I am a national merit scholarship winner and I have studied this finance and I have studied stock markets thoroughly, intricately, and I have attended a hell lot of seminars and webinars on how to make money and all. So today, this seminar, I'll start with a basic question because, everything happens twice in your life. Everything happens twice in your life. One, it happens here in your mind. When you close your eyes, in your mind, it happens. And the second thing is after it happens here, then it happens in the reality. So to become rich, first in your mind, you should become rich. The thought process should be groomed, nurtured. After that, in reality, it will happen. It's not about daydreaming or having goals or ambitions, I'm telling you. It is about the kind of vision you should have. That is what I'm speaking about. So the basic question I'm starting with is, if you have money, be it 1 lakh rupees, be it 1 crore rupees, if you have money in your hand, what will exactly you do with that money? What will be your choice? What will be your alternative? What are the options available to you? So first alternative is, Pavan sir, I'll spend that money. So when you are spending money, for what you spend money? It could be for basic necessities. It could be for comforts. It could be for luxuries. It could be right from your bread and butter. It could be shelter. It could be clothing. And then moving forward in the plane, it could be fancy accessories. It could be fancy gadgets. It could be, your laptops. It could be kind of clothing. It could be the jewelry. So shopping gives you a lot of happiness. And the same thing with me. Shopping gives us a lot of happiness. So we buy things, be it for basic necessities or be it for comforts or be it for luxuries. We buy things. So this is alternative one. We spend money to purchase certain things. Then the second spending comes for, your travel. Vacations, long drives. Oh my God, don't even ask me how much I'm fascinated about this, going on long drives, exploring things, even if it is, a soul trip also, even if it is a backpack trip also, just, have a backpack. And I have traveled to other countries also like that. And the kind of energy it gives, 10 days trip, my dear friend, I'm telling you, it gives you energy to live another 6 months effectively. So I strongly believe personally, one trip every 6 months is required. So in other countries, they also create a fund called travel fund. For vacation, they save money. 10% of their money they save for vacations. Unfortunately, in India, it is not there. The system is not there. Maybe few affluent people, or you call it privileged people, they go for traveling, they go for trips and all. all the remaining people, they keep on planning the trips. Okay, neither you have money or you have money, but you are a machine, you are a robot, you are a slave to your own, framed destiny. You are putting yourself in a circle and you cannot. And I do not have any right to criticize these kind of people, because till a couple of years back, till 2016-17 probably, even I am one among them, like a machine, like a donkey, like a slave. I used to work unmindful of my personal life and my pleasure and happiness. But later I realized you have to save some money, you have to go for these trips, either with friends or with family, or at least solo trip. That gives you tremendous amounts of pleasure. That is required. So traveling is required, shopping is required. This gives you fuel. This makes your soul happy. But the problem is, if you earned money yesterday and today you are spending that money, what will you do tomorrow? So yesterday I earned money, today I have spent that money and I consumed the benefit of that money today itself without future economic benefits, without accumulating wealth, without accumulating assets. The question to be asked is, if this is your life, my dear friend, can you work till you die? Are you going to work, or will you be willing to work? Do you think you can work one day till one day before you die? So daily, today I earn money and tomorrow I spend money. If that is the case, how long can you work? You cannot. So alternative one, spending money for your comforts, necessities and luxuries, that is inevitable, that is required. I'm not saying don't do this. Having said that, second alternative should be investing. So the first alternative, when you are spending money, this cannot create wealth. This can create only memories and happiness. This cannot create wealth. Tomorrow if some contingency is there, do you have bank balance enough to go for that? Say it could be some health problem also. So tomorrow 2 lakh rupees or 3 lakh rupees is required. All of a sudden, from where you bring, unless you have a habit of saving money? So will you go and borrow that day? So alternative one, spending money, it will not create wealth for you. Okay, so this is what I told you. What about tomorrow? How many days you work? Will you be willing to work till you die? No. Then Pavan, what is the alternative? Alternative 2 is investing. Have you read the book Intelligent Investor, or have you read the book The Rich Dad and Poor Dad? I read a lot. Have you seen this sentence from The Rich Dad and Poor Dad? The weaker section, the poor and the middle class, they work for money, but money works for the richer. So if you are a rich person, you will not work for money. Money will work for you. Now today, though it is a funny example, look at Mukesh Ambani. Do you think Mr. Mukesh Ambani, he is working to earn money for his livelihood, bread and butter? Do you think he works for money? No. He does his economic activities which make money. Having said that, he is not craving for money. Money works for him. He is not working for money. That is what we call the smartness, the strategy. Boss, money multiplies. If you know how to play the game with money, money will make money. More money will make more money. But you should be smart enough to understand that. So, Pavan, what is the alternative? There are 3 types of investments. Point number 1. Traditionally, like how 80% of Indians have been investing money in fixed deposits of banks or post office recurring deposits or life insurance. Majority of these things are one, for a tax savings. Unfortunately, you do not have any other option. You have to, invest money in insurance and this kind of products for tax savings. And then asset accumulation, which will not give you higher returns on investment. For example, you purchased a flat. When you own a house property, do you know what is the return on investment the house will give you? Some kind of unit linked insurance policies you call it, or the investment policies you call it, or so many private investment companies or insurance companies are giving you fancy proposals. On the face of it, you feel like wow. So one company says invest 1 lakh rupees every year for 10 years. After that, we'll give you 1 lakh rupees for 20 years. You're like, wow, I'm getting double the benefit. You are a donkey. Stupid. There is something called time value of money. If you calculate properly, they are not even giving you 2.5 to 3% of return on investment. Your internal rate of return, your return on investment will not even be 3%. So you should know how to calculate returns, how to calculate risks. So basically, in my second alternative investment, I have categorized people into three options, three categories. First one is, as I told, they invest money in fixed deposits in a bank or recurring deposits or life insurance policies and all. These people, either they do not have the skill of doing business and making more money, or they are very conservative. They do not take risk. They are risk averse. They are not even risk neutral. They are risk averse. I'm not criticizing them. Even that is required. In a family or in a board, one person should definitely be like that. And my dad is this category. My dad was, always into this conservative approach. Nothing wrong in it. But what is the return on investment you get? Today, savings accounts and fixed deposits are not even paying 5%, not even paying 5%. That is category 1. Category 2, start a business. Every employee of every organization, in every industry, in every domain, in every platform, whoever you are, whether you are working as a peon or you are working as chairman of a company, you crave for always, you feel like, kuch business karna hai yaar. I want to do some business. I have friends who are doctors. I have friends who are chartered accountants. I have friends who are engineers. I have friends who are into software. I have friends who are working in BPO. My family, majority of people are into government sector, government servants, government officers. Everybody wants to do some business. But what business? No one knows. But do you know, business requires a lot of skills, knowledge, perseverance, emotional balance, and more than that, patience. Such a hardworking guy you should be, if especially you are first generation businessman. If your dad or granddad have established some business, you are taking care of that. Still, I'm not saying your life will be easy, but I'm saying your life has a vehicle which you can drive. So starting business on your own is not very wise unless you have a proper business plan, unless you have a proper backup. Here, there is a lot of chance of losing money. Then Pavan, what am I supposed to do? The best thing is join hands with a person who already has a proven track record of creating wealth. Excellent track record they have. You know that they can create money. You know that they are people with so many filters and folds in their brain, their left brain, right brain, you call their logical brain, any type of thing. You speak about any type of smartness, they are like that. We have so many examples, okay? We have Ambanis, we have Adanis, we have Tatas, we have Birlas, we have Mr. Premji. So many people, they know how to make money. Look at company like ITC, whatever the product they start, it will be successful. Whatever the division they enter into, it will be successful. Whatever the strategic business unit they are into, it is in profits. So the third option is join hands with someone who is already into the business. It is something like identify a winning horse. Pavan sir, should I bet on the winning horse? No. Travel with the winning horse. Don't bet on the winning horse. I am not speaking about speculation and gambling. I am against it. I am in favor of long-term investments. I do a lot of gimmicks in stock market also, including intraday and all. But I am not suggesting this to anyone, including my own family, including my own friends. Given a chance, you should not go for this intraday kind of things because no one really made money in this. But long-term investments, yes. And now mind-boggling, this will be a mental assault, I'm telling you, if you do not know this. Can you imagine 10,000 rupees invested in Wipro company, 10,000 rupees invested in Wipro in 1980s. Can you believe today what is the value? The one that is visible on the screen. Read that. You're like, what? Wait, what? 10,000 rupees invested in Wipro in 1980s is, my dear friend, hold your heart, 499 crores today. 499 crore rupees today. Can you calculate what is the return on investment? Can you calculate? Now people say, no, we don't trust in this. Two things. One, I will prove you with all the calculations. I will show you the history. What has happened exactly, I will show you the history. Two, Google it. Go to Wipro's own website and start doing research on that. Do your own R&D. In 1980, if you have put initial investment of 10,000 rupees, those days Wipro face value of the share is 100 rupees. So you could have invested 100 shares. So 100 shares into 100 face value is 10,000. 100 into 100. So if you invest 10,000, how many shares you have? You have 100 shares of 100 rupees in 1980. In 1981, they have issued 1:1 bonus. That means for every one share you have, they will give you one bonus share. Bonus share is given free of cost to the existing shareholders. If you do not know what is rights issue, bonus issue, you can Google it. But bonus issue is a bonus share, is the share which is given free of cost without charging anything to the existing shareholder. So 1:1 bonus means for every one share you hold in the company, they will give you one share free of cost. So till yesterday you have 100 shares. Today, because of this 1:1 bonus, thanks to the board of directors, you have got 200 shares, 100 shares into 2. 1985, again they have come for 1:1 bonus. So your 200 has become 400. In 1986, they have divided the share. It is called stock split. So one share of 100 rupees is split into 10 shares of 10 rupees. Stock splits, reverse splits, stock consolidation, converting stock shares into stocks, converting stocks into shares, all these things. You know, if you are not from finance background, you feel this is the kind of jargon, but my dear friend, if you are a student of CA or if you know little bit of stock markets and finance, these are common things, okay? To regulate the demand and supply in stock markets, people do that. SBI has done that. Infosys has done that. So many companies have done that. So then they have given a stock split. That means 100 rupee share will become 100 rupee share will become 10 shares of 10 rupees each. So how many shares you have? 400 into 10, it will become 4,000 shares. Next, again they have given 1:1 bonus, 4,000 has become 8,000. Next, again they have given 1:1, 8,000 has become 16,000. Again they have given 1:1 bonus, 16,000 has become 32,000. Again they have given 1:1 bonus here, 32,000 becomes 64,000. And then come the jackpot, they have given 2:1 bonus. That means for every one share they have given 2 shares to you. Oh my god. So 64,000 shares has become 64 into 3. One original share, 2 new shares, total 3 shares, 1,92,000. And then 10 rupee share is split into 2 rupee share. That means each share of 10 rupees will become 5 shares of 2 rupees. Then how many number of shares you have? 1,92,000 into 5 it will become. That means 9,60,000 shares you have. 9,60,000 shares. After that, again they have given 2:1 bonus, jackpot, 2:1 bonus. That means for every one share you held, 2 shares they'll give you free. So 9,60,000 has become 9,60,000 original shares into 9,60,000 into 2 shares. So 28,80,000. Again in 2005 they have given 1:1 bonus, then it has become 57,60,000 shares. Again in 2010 they have given 2:3 bonus. For every 2 shares held, they are giving you 3 shares bonus. Then your shares have become 96 lakh shares. Then in 2017 they have given 1:1 bonus. So 96 lakh shares has become 192 lakh shares. 1 crore 92 lakh shares in Wipro, dude. You are bloody rich, filthy rich now. Today, the market price of Wipro, you can Google it, it is around 260 rupees. Even today, there is a buy call on Wipro, you know that. Take my word, today we are sitting on 20th of December 2020. Within next 1 month, this IT sector, information technology sector is going to grow like anything. So TCS, Infosys, Wipro, it is going to be a good time for all these shares. That's what I was told by my portfolio manager. So Wipro share is 260 rupees. Now take your calculator. How many shares you have? 1.92 crore shares you have. How many shares? 1.92 crore shares into 260. Calculate it. Calculate and see what is the value. That comes to 499 crores, 20 lakh rupees. Hold on. Now that you understand, 10,000 invested in Wipro has become 499 crores. But do you understand? I have not considered dividends paid by the company. They have paid so many dividends also. Isn't it? Every year they might have given final dividend, they might have given interim dividend, but I have not considered dividends. So when you are investing money for the long term, there are so many benefits, like, stock splits will happen, bonus shares will happen. These will multiply your holdings and the share market prices will keep on increasing. You should identify. Do you remember my third option? Identify a winning horse. Don't bet on it. Invest and travel with it. So the only way you can create money in stock markets is to have financial discipline. You should have financial discipline. You should have attitude of, investing money. Patiently you should wait. And imagine 100 rupees you invested in Wipro. It has become 125 rupees. 1 lakh you have invested in Wipro, it has become 1,25,000. You are like, wow, I earned 25,000 rupees more, so I'll sell and I'll make money. Wicket is bowled. Some part of money, like at least, your 10% of your salary, say you are earning 50,000 rupees per month, 5,000 rupees you should be able to systematically invest. Pavan, I do not understand equity markets. It's okay. Invest in mutual funds. There are so many better mutual funds. So I'll be doing series of, this videos and blogs, and this is only part 1. This might go to part 100 or 200, who knows. So I will explain mutual funds, right from, all the types of instruments, be it options, be it call option, put option, be it a forward contract, or be it a future contract which is in stock market, be it commodity market, be it foreign currency. Everything we'll discuss. Shares we'll discuss. Debentures we'll discuss, other debt instruments we'll discuss, and we'll discuss bank FD rates also. We'll discuss traditional insurance versus unit linked insurance. We'll discuss everything. If it comes under the umbrella of stock market, we'll discuss that. Having said this, there are so many people who have become billionaires, millionaires in stock markets. Having said this, do you know there are lakhs of, or probably the crores of people who lost money in stock markets? There are certain gray areas also, like insider trading, like, some evils which have terribly gone wrong. Now that 1992 scam, this has come about, Harshad Mehta, people are crazy. You might have seen that in OTT platforms, I think Amazon and all, and you might have, enjoyed the movie and like, wow, a dialogue writer who has written excellent dialogues and all, you might have gone through the series and you're like, wow. And some of you might have seen the Wolf of Wall Street also, obviously Leonardo DiCaprio. So you're like, there are gray sides, there are positive sides. Remember one thing, it is never about ethics versus profits. It is always about ethical profits. Pavan, being a law abiding citizen, not doing anything illegal, not doing anything unethical, systematically, properly, can I make money? The answer is yes. In stock markets you can make money, but hold on. Remember one thing, you should know 2 aspects, risk and return. Without understanding the risk, if you are getting into the stock markets, your wicket will be bowled. You cannot even recover, I am telling you. You will lose your capital also. Forget about return on investment. So to make money in stock markets, the first and foremost prerequisite is knowledge. So my intention in bringing this financial literacy to you is learn before you earn money in stock market. Learn before you earn money in stock market. So step by step, let us learn. Step by step, let us understand. Step by step, let us plan. Systematically, let us invest and let us make money. Again, I am telling you, I am not into any kind of consultancy or investment broking or investment advisory. I am just a chartered accountant with some knowledge in stock markets. I am not saying that I have two horns and all. I have seen both the theory and practice. I have 1.5 decades of experience. So as a friend, I'll be guiding you through this journey with the information what I have, with the knowledge what I have. So this is part 1. Thanks for watching. Keep watching, and in 2-3 days we'll be releasing next part. Thank you.